Hello again. Welcome to the closing bell on the 1st of December for me, around midday, and basically things are shifting, aren't they? There's definitely a feeling in the air that the worst is over, as far as the immense bond sell-off that we've witnessed over the last 3 years. There's a chance that is the case, and I'm certainly sitting up to take notice due to the fact that last month we've got that confirmation for me of the sell pivot. So this being the US 10-year bonds, and I've just been watching this. You know that I've been saying to you, this is the bond yield chart. You can see there the yield 5% on the 10-year bonds. So this is the big sell-off from 0.5% over the last 3 years, going a long way higher, didn't it? Massive sell-off in bonds and a huge spike in yields. It's been really what has caused all of the problems in stocks for us for the last couple of years, going nowhere, treading water while this all played out. And really, for me, one of the first concrete signs that maybe it's time to think we're getting closer to the end than the beginning, that's for sure. So that monthly sell pivot you can see there, for me, is quite important, especially in the bonds, because they can just change direction so quickly. I know I keep saying it, but these cycles, when they turn, can be quite rapid once the market cottons on. And sometimes, things start breaking and the Fed starts freaking out and lowering rates instead of raising them quite quickly. So it can be quite sharp, the U-turn. So this sort of event with the sell pivot is one where I'm going, okay, I can now start looking at things from the point of view that going forward, we may see a continued fall in those yields. Maybe not tomorrow. I still expect to see, maybe we're going to see attempted sort of sell-offs and rises in yields, but I'd be expecting the yields to find buying support and to ultimately turn back down. So I'd be sort of saying from here, I really need to see like a monthly close, above 5% in those 10-year bonds before I'd really say, okay, that one hasn't worked. And the uptrend you can see there in yields is continuing. So, that is the case. Happy to fall on my sword and say, that was a dummy, that sell pivot on the yields. But until that happens, I can now sort of look at things from the point of view that perhaps, like here, we could be at the top of a cycle right now. And you can see that was a few cycles ago. That's back in 2008 that it got up to this level. So, there is there is form in the past few decades that this area has capped rates. So, nothing you can say other than, higher probability that we're ultimately going to see this rollover. I'd have to wait for, the actual long-term trend to shift down before becoming exceedingly confident that things are going to possibly trend lower in yields. And we're not there yet, are we? So this is really a first step on that road to things rolling over. But I think if you're aggressive and it's been such a big run and it's been so difficult out there, are stocks going to rally as rates fall, or will stocks fall as the rates fall? That's a possibility if the economy keels over. We have to be aware of that possibility, which is why I'm sort of thinking soon, when I get my exact levels, which I can't tell you about, I think it could be an idea to start getting a bit of exposure in bonds, and maybe it's looking at some of the utilities or Telstra or things like that, high yielding stocks, secure earnings, that sort of thing. Maybe they're going to see a bounce. Property stocks even, dare I say it, they've really been hammered on the ASX. Maybe you can pick up a few of those. It's sort of that time, I think, to start considering what you'd like to do if we saw bonds really start to rally from here. Now, I don't think they're going to fall all the way back to where they were. I don't think that is what we're in for at all. And who knows, maybe we have a year of rallying or two, and inflation rears its head again, and rates go like that. I'm open to that for sure. I'm just talking about what are the odds now in the immediate future. A good chance we have quite a sizable fall, and you don't need to risk too much to find out if you're wrong. That's, I guess, the overall gist of what I wanted to say. And I'll just show you, there's a few key markets that are all sort of showing the similar signs across the board. Those bonds rallying, US dollar selling off, gold taking off, copper turning up, but other commodities certainly under pressure still. So no real signs of thinking we're about to see a massive commodity boom, but just showing you a few of these big picture charts to get a sense that a lot of them are in agreement about what's going on at the moment. So there's big money flows going in that direction. So the US dollar index, it's been a pretty tricky one, and I don't look at it too often or make any really big calls, but just looking at this, going back, a long period. This is going back to 2000, and those long-term monthly trends and that sort of thing. We've seen a huge rally, haven't we, over the last year or two? And then we got the sell-off in that US dollar back to what is that midpoint, point of control, which is also that resistance from the last 5 or so years. So I was looking at that thinking, wow, US dollar could take off. And I was starting to get quite bullish on the US dollar as it turned up. And then we've had the rally in that US dollar over the last few months, which went up to that area, which is a bit of a danger zone, that sell zone of that major wave. And we've seen the selling pressure come in to that US dollar. So just making it up close, just very quickly. I'm not going to talk about this much. So basically, long-term downtrend, you can see there, just turning, retesting that sell zone, big monthly sell pivot. So from here, really any rally in that US dollar, I think, will meet selling pressure. I really need to see it, heading back above those highs around 107, 108, and, monthly closes above there may change the story. But right now, I'd be saying I think any buying will meet selling pressure, and what happens below there, you're looking at a possible move lower in the sort of short, medium term in the US dollar, potentially from here. So that's sort of how I'm looking at it. Not willing to necessarily trade it, but I'm sort of looking from a bearish point of view on this US dollar now, going forward, and considering what that is going to mean for other markets out there. I mean, gold has really picked up recently. As we've known, it's been sort of tricky for me because of the 3-year range it's been in, and it is still in that range, but a long time sitting in a range you're waiting then going, well, how is this going to break out, to the downside or upside? And when it does break out, it can really move. And we know that the long-term story on this is of a nice uptrend, isn't it? Over the last however many years, the initial wave higher, couple of years of treading water, these ranges, oscillating around the point of control. Another big wave higher to go and, retest that old all-time high. And of course, the false break. And then it's done a lot of work. And we've been tracking this over the last few years, just, looking at that range it's been in and really just analyzing everything based on that. So once you've got that range in place, the point of control has been the really important level, which it's been oscillating around. You've got the buy and sell zones, and also, the false breaks of either edge, so that's really all I've been looking at and thinking about. But now I've been sort of waiting and watching and thinking, okay, well, let's turn back into a long-term uptrend there. We've gone to retest that all-time high again, which got rejected. So then, another revisit of that point of control, that major and very important level. And if I just really bring it up close, because you can, the long-term story now. Having seen that chart, just wanted to show you that old high from 2011. And now it's really on that tenterhooks for me that you've got that huge uptrend underneath it. We've seen the false break of that low, and I said at the time that was the buy signal and the best risk reward entry point. And that's when we bought some gold stocks in our services, which we've been running. But most gold stocks have really been struggling, even though gold has actually been looking all right and, close to the all-time high. So now that it feels like it's sort of done the work, and it is still in the range. So that's always the risk, maybe it's not going to break out. And yet again, it fails back to that point of control. But that's why I've been waiting, watching, and we've had the attempted rally after the long-term trend turned up, the retest of that long-term moving average, and then turning up from there. And I've just been really waiting and watching. And last month, we have a monthly buy pivot. So that's sort of the, really waiting for that sort of final confirmation that this long-term uptrend is possibly in play, and that the gold price is possibly starting to trend again. So now you're considering, well, what happens if it does actually break out now above that all-time high? And after 3 years of consolidation, you're looking at something like this, where you've had the move, lots of work done, and then off it goes to the races, nothing to stop it. So here, considering, well, what can this look like? Why can't it do that? I think it can. But, you're always saying, well, where am I wrong? If that's not the case. And really, the total line in the sand is, back under that low from last year. That's down at 1,600. But really now, if the gold price just gets hit from here, can't carry on, and fails and heads back below that recent low, which is around $1,800, I'd be getting sort of nervous on thinking that it is starting to trend. So there's a good line in the sand there to say, yeah, look, it's not working if that were to happen from here. So you're sort of saying, well, the upside is, quite big if we get the breakout and it really does start to power. And, pretty quickly if you're wrong, if everything just turns back down and gets hammered from here. So for me, I'm just going to now that I have all of this in place, any weakness into this area, that 1900 area, I'm going to see as a buying opportunity and really be playing for the breakout above the all-time high and then seeing, what can happen. And with the way the US dollar's looking, the bonds possibly about to rally, perhaps for months after 3 years of getting hammered, real rates, falling, it might be ripe to run. And, when gold runs, when it breaks out and the uptrend's in play and it goes, it can run for a long time, can't it? So I guess that's one of the key markets after that monthly buy pivot that I'm now zeroing in on for the moment. And I'll just show you a few others. Look at this S&P 500. What a strong month in November. Certainly unexpected by me. I really did think that it could fail. If you've been watching this, below that low, I was sort of predicting the fall to that level around 4,200 and was saying, look, it's now 50-50 which way it goes from here. But was saying, look, if it does fail through this level, it can really get quite ugly. And in the end, it managed to hold in there and bounce. So, for me, looking at this, usually I'd be saying, look, this is a very strong buy signal that the uptrend is now returning, and that may very well be the case, depending how what happens from here. But there is really a serious line in the sand now for the market below that low from last month, I guess you could say. So it is still the case that if things turn down and head back below that low from last month, it is going to look very ugly and you'd be running away from things. But while that level holds, this is now, you've got to be looking at it from the positive point of view. Any selling pressure should meet buying pressure, and breaking out above these levels is to new all-time highs. So really, you've got to sort of back off from being too bearish right here. But the thing that I guess concerns me is that commitment of traders data that I was showing you last week, and the fact that we've had this big run over the last month, but the dealers, the big banks, that sort of thing, have been increasing their shorts, and they have quite a large short position at the moment. Asset managers not really increasing longs that much from what I can see. The leverage funds increasing short positions. Now, look, it's the commitment of traders doesn't tell you the whole world of exactly what's going on. There's a lot of other stuff going on that you've got to consider. It's not a magic bullet to know exactly what's happening out there, but it does just make me concerned that there's not a lot of conviction behind the rally, and that it's really top 7 stocks that is causing the S&P to be close to the all-time high. And if you go beneath the surface and look at the smaller and mid-cap stocks, they're all still very weak. Just as we have the situation in Australia. So the breadth of the market actually isn't that great at the moment. So it puts me in a bit of a quandary, I guess, because you don't want to have, confirmation bias, which is that you're just trying to make the charts agree with whatever you think. So that's why you have a model at all, just to help guide you along the way. And my model at the moment is saying, if I didn't know what the market was, is saying, wow, watch out. Any weakness should see buying support, and it could be back through the all-time high soon and trending higher. So that's just a strict reading of the model, but just knowing what's going on, where rates are, economy could be, on the edge of slowing down more rapidly than people expect. Is this a massive dummy? So I guess I'd say I'm now being forced to turn off being too bearish. But tell you what, if it turns down in the short term, head back through that low, things can look awful very quickly. So hopefully that adds a little bit of value to your day. If it did, press like on your the YouTube video. I need them. They really help. They make my day. So that's enough. I'll rack off now and talk to you next week.